as well, who's joining in on the show. Hi there, Sanjiv. Morning. Let's get in your thoughts then on what happened then with the Bajaj twins in trade yesterday.
Yeah, good morning. Awan, I think Bajaj, both the twins have been on a weak wicket after that, QIP they did. And when knowing fully well that there was some ambiguity on the SEBI order on further business, they went ahead with that. And, it was one of it met with a very poor response, not on the actual size, but on the feedback from the company. So I think that they are on a weaker wicket, as you're aware that prime lending in IPOs and other spaces is seeing a backseat. And Bajaj Finance, for whatever reason, both those twins are under pressure. I don't think there is going to be any comeback very soon as the market shifts towards better names in the private banking. So I think both the Bajaj twins are going to remain under pressure. And now with the RBI and SEBI being very stringent on certain practices, and I'm not saying Bajaj is part of that, but there will be a lot of stringency on observations and procedures. And because of the mass scale lending, which most of these NBFCs do, there can be some more pressure over there on adherence.
Yeah, absolutely. And we've seen the clampdown and very stringent one at that. Sanjeev, as of last evening, it was JM Financial. I mean, I'm sure we'll see the impact come by on stock prices as well. But in terms of a market sentiment, what would you think it would do to maybe overheated pockets like small and mid caps? Do you think we will see a sizable correction or profit taking come by there?
Well, Aisha, like I said, beware the Ides of March. I'm not sounding ominous, but yes, there is a much needed correction in the market. Large caps is where I want to protect myself. The correction may be, more in mid caps, but you cannot leave the market as a whole. And we've been suggesting that HDFC Life, ONGC, Vedanta, these are some names. But on mid caps, be very, very cautious. This unprecedented rally and now the flow of money and now this SEBI observations are all telling us that leverage may be over there, not leverage in the shape of the derivatives, but leverage in the shape of co-lending and taking collateral, because a lot of people have NBFCs particularly have started co-lending and so on. So that could be a little bit of a worry, and the valuations are not in sync with a large part of the market. So we think private banks, the stocks which we named, HDFC Bank, HDFC Life, Vedanta, ONGC, these are very, very sweet spots to be in. And for mid caps, it is just about right time to take some money off the table. And like I said, the second half of March can be volatile with a downward bias.